Welcome, everyone. We're ready to get started with today's webinar. I'm Allison LaForgia, the Senior Webinar and Events Manager at HousingWire, and today our topic is Everyone in the Chain Loves eNotes. Throughout the session focused on eNote adoption, you'll hear from every participant involved in the production, closing, funding, and selling of eNotes. Today's webinar is hosted by DocMagic. A few housekeeping items before we get started with today's session. We will be having a Q&A session towards the end of the webinar. You can submit questions at any time by using the Q&A icon at the bottom of your screen. This webinar will be recorded, so HousingWire will send out the recording to all registrants in the next few days. Now, I want to make sure we get through all of today's content, so I'm going to pass things over to Dan McGrew, who's the head of eNotes at DocMagic, and he'll get us started with today's content. Dan, the floor is yours.
Thank you, Allison, and thank you everybody for joining today. This is a very exciting time. We've put together a panel of folks that represent every single category for the most part in the process of producing, funding, selling, closing eNotes. And the best thing about this is you're going to hear from people that haven't done a couple, that are not involved in it, just putting their toe in the water, but they have significant experience in this process. And so we hope today you find you have it's a great education for you that we anticipate through the questions that we ask and discuss and talk about, that they are questions that you'd want to know, because we want you to walk away not only educated, but hopefully motivated that this is a good thing. So let me start with introductions. I'm going to start with you, Mr. Jeff Reeves. Go ahead.
Hi, I'm Jeff Reeves, CEO of Canopy Mortgage. We're an independent mortgage banker located in Utah. We have both a retail and a consumer direct channel.
Thank you, Jeff. And Cindy?
Hi, I'm Cindy Gressett, and I manage warehouse lending operations for Origin Bank. And I've been involved with MERS and anything that we can do to help automate the process for the lending docs and collateral for 30 years. We'll say 30.
Thank you, Cindy. How about you, Michael?
Hi, Dan. Appreciate the opportunity to join today. I'm Mike Cafferkey with Fannie Mae. I manage our e-mortgage program at Fannie, and I have been at Fannie Mae, believe it or not, since the mid-'80s, but the last 15 plus years have been intimately involved working on establishing our e-mortgage program, both the requirements, working with industry partners on kind of establishing the infrastructure, and then working with really all of our partners to kind of create the ecosystem to make eNotes a reality. So I work very closely with both our customers as well as the technology providers, the funding providers, really everybody in the ecosystem that touches the eNote.
Great. Thank you, Michael. Peter?
Yeah, thank you, Dan. Also appreciate the opportunity to join this call today. Again, Peter Wuger, I'm AVP co-issue and correspondent e-mortgage operations for Mr. Cooper. I've been with Mr. Cooper for 10 years. Started in finance, moved to project management, and I've been in the eNote space for the last 4 years.
Thank you, Peter. Sally?
Hi, I'm Sally Taylor with First American. I've been in title and escrow for over 20 years. And I'm on this webinar today because most recently in the past 2 years, I created our national centralized First American RON team with our employees as the notaries.
Very good. Thank you. Well, thank you all. My name's Dan McGrew. I've been in the e-close space exclusively for over 10 years, helping lenders and everybody in the chain try to get to the place of eNotes. Welcome again, everyone. Let's get started. Okay, so the first thing I want to ask is, I'm going to go to you, Jeff, as the lender. There was a time and a place before that you were doing business, we'll call it the traditional way. You now have produced eNotes. I know that you and I have worked together for a few years. Tell the audience, if you would, eNote's a good thing. Are you a fan, and why?
Yeah, big fan. We had wanted to do this for many years, but as an independent mortgage banker, selling mostly to aggregators and a little bit to Fannie earlier, we didn't feel like we had the liquidity options to be able to fund eNotes and get the best price for them. Thankfully, the pandemic sort of motivated some movement in that space. and help us feel more secure in doing so. And so we, it's kind of our default. We're just under 40% of our production is eNotes. And I could go on forever as to why. The first reason for us has been and will always be the consumer experience. Nobody wants to sign by hand 140 pages of a closing package. And so if we start with the consumer and what the consumer wants, they want it digital, they want it easier, they want less paper. And that really is our focus. There's a whole bunch of financial reasons which we can dive into specifically, and I think we should at some point. But really, for us, it all started with the consumer experience, which is much better with an eNote.
Okay, so with the consumer experience being better, let's go internally for a second and talk about for your operation. How big of a change was it? Was it the equivalent of, you know, tearing down your house and having to start and restaff with a whole group of new people? Was it a disaster? Just talk a little bit about what was what was it like converting and moving to eNotes compared to the traditional way you did it?
Sure. Look, anytime you have change, there is inertia. Most people don't like change, and so I don't want to suggest that it's easy, but we make it more complicated than it needs to be. So as soon as we committed, you know, as an executive team to this initiative and made sure that our LOS, which is a proprietary, made the process as seamless as possible. So there wasn't any extra work on the part of the team. That was a big item for us. I believe that with most tech today, it can be seamless as well, even if you don't have your own stuff like we do. And so it's about, you have to train all stakeholders involved. That means you have to get with a closing, with loan officers, with processors, and those who are involved in the closing process with you, to help them understand what's different and what could go wrong. And if you're real about those things, again, they're not that big of obstacles. You just have to understand what obstacles are going to be there and talk about them frankly, and help all stakeholders in the process, the borrower, the title company, the warehouse bank, help everybody understand where the win is for them. Everybody ultimately cares about what's in it for me, right? And how does this help me? And so if you can't help your loan officer or your borrower or your title company understand why this is better for all, then you're going to lose. And so for us, it was just about being intentional. This is what we're going to do, and this is why we're going to do it. This is why it's going to benefit you. And if you can speak to that, people in the chain see it and they feel it, and nobody wants to go back who's been down this road. Okay, great. So you mentioned liquidity. Was there a time and a place, Jeff, that you wanted to produce eNotes? You wanted to eClose, you wanted to produce eNotes. Was there a time and a place prior to current day that you've got a lot of history under your belt doing it, that you felt stymied, that you couldn't move forward either because you're warehouse bank investor? Was there a time that was the case? Sure. Before the pandemic, really you had warehouse blaming investors, investors blaming warehouse. Nobody really wanted to get started. And the pandemic, it kind of gave us an excuse to finally move the dial on this. And so people like Mr. Cooper, you know, was one of the first aggregators to begin buying eNotes. Others got on board. Fannie Mae, of course, Freddie Mac always have. And so as soon as we began we are an industry of followers, unfortunately. And so as soon as we saw a couple of key players step up to the plate, we saw many follow quickly. And that was a good sign, both on the warehouse side and on the investor side. Okay, great. All right. Well, that leads me to a question for you. One of the ones which you mentioned was warehouse. Cindy, tell everybody from a warehouse perspective, okay, are you a big fan of eNotes? Do you think they're a good thing? You're obviously funding them.
tell us why. Well, why is it a good thing if you think that?
Exactly. I am a big fan. I was fortunate enough to work for executive leadership who saw the writing on the wall, who said, like it or not, it's coming. eNotes are coming. We didn't have a single customer or a lender originating eNotes, but we wanted to be ready. And so basically by we, I mean, I was the only one in my spare time who reached out to the counterparties that I thought would have the greatest impact and be the best partners for me to learn everything I needed to learn about it and how it would impact us as well as our customers. And so I'm proud to say that Origin Bank was the 4th warehouse approved to do eNotes by Fannie Mae or Freddie Mac, and the 5th approved by Fannie Mae. So we wanted to eliminate that excuse right there for not getting started. And then and this is something I tell all lenders who reach out and say, do you do eNotes? I don't just say yes. I say we do them very well. We have excellent partners. Our eVault vendor is an excellent partner. Fannie Mae is an excellent partner. MERS is an excellent partner. Reach out to me. There's a lot more work on the lender side, as Jeff explained, to rolling this out. But it still took me quite a while. And I wanted to make sure that I could be a source and help provide resources for any lender who just felt kind of stymied and maybe overwhelmed by such a huge change. And so I recommend that lenders hop on any webinar that they can, go out to the digital mortgage sites for Fannie and Freddie and MERS, and just start looking at the information, the checklists that are available, and get comfortable with this focus, get comfortable with the terminology, with the process from beginning to end, and make sure that you're capable of creating 2 processes initially so that you can continue to handle the paper as efficiently as before, and then the e-closings side. And so that's what we did. And we've got, we do several hundred eNotes a month. Canopy actually is our largest eNote lender, and it just couldn't go more smoothly. I almost don't pay any attention to it. There's much more benefits, obviously, for the lender side than warehouse, but the key benefits on the warehouse side, absolutely lower risk. I would almost say none at all with double pledging, losing notes, got better control, and turn time, immediate receipt of the note, and then immediate transfer to the end investor. Fannie Mae, I've seen over and over again certify notes within minutes of transferring them over. Yeah. It is a beautiful thing. Exactly. Initially, wrote a little white paper about 4 years ago, and still trying to educate myself and the bank, as well as any customers we have, about what eNotes are and how to handle them. And at the time, we were trying to figure out how much we would have to charge our customers for banking eNotes on their line, because the turn time was going to go from, I think it was about 18 days at the time, down to what we were told was 2 or 3. The average is really about 4 or 5 days, depending on the lender. a lot longer for Ginnie Mae. That's another story. But basically, it's the same charge. I mean, we started out charging a little bit more in fees, but there's a little bit extra work for us in trying to make sure that our warehouse lending system matches the data that's in our eVault, so that we don't have to go two places to see what the status of our collateral is. We don't want to look in the eVault and WLS. We want to be able to see it all. So we're able to export statuses for all of our notes from the eVault and import them in a few seconds into WLS, and we have a handle on everything. But that a little bit of extra work more than makes up for the fact that we don't have to do the shipping of paper notes. We don't have to worry about the GSE or investor saying they didn't receive it. Anything is better if you've got electronic tracking, and really the inability to commit any sort of fraud with regard to collateral. So
it's way
all
harder
good
to
things.
fraud digitally than with paper. It's
Right.
a safer environment for sure. Let me add, Cindy, to or to everyone on the call here, that we chose Origin as a warehouse bank because they were one of the first warehouse banks to offer eNotes, and they've been a delight to work with from the very beginning. Anything that you try that's new always takes some getting used to, and we both stumbled a little bit the first few weeks, but it was really easy to get up to speed, and they've been a delight to work with ever since.
That's great. Cindy, let me ask you one other question. If you take the top 5 things that you, prior to eNotes as a warehouse bank, the top 5 things that were the most critical in your process, and you compare them to the top 5 things that are current day with eNotes, okay? Is there anything that you look at and you go, well, back in the day when we were all paper, that was a better process? Is there anything that you can point to that would say it was better then than it is today from your warehouse perspective?
Absolutely not. No,
Oh,
I would never go back to the old process, especially number one is risk mitigation, and that's improved. So there's no reason to go back to a riskier, potentially very costly process.
cool.
And
Okay.
also, I understand, you know, on the lender side, one of the benefits is to make the product more attractive to your customer. And I actually just read yesterday, I'm terrible with numbers, believe it or not, but I think I read that there was 40-something% of homes right now in this crazy market are actually being sold to millennials. My daughter is 28 years old, and she and her boyfriend are looking at building a barn dominium. And I asked her, I said, I can reach out to a couple of my clients who do construction loans and see if they would be, you know, interested. And one of them does e-closings. And she didn't even ask me what that was. She said, oh yeah, absolutely. I mean, she said if she could do everything online, she'd be a happy camper. And I don't believe she's the only one. You know, I believe that there's a lot of younger people out there that would take that option over paper any day.
Sure. Okay. Thank you for that. Okay. Let me, one of the other issues that we run into consistently, we're going to get through all of them, but one of the issues that is constant is investors. So let me ask you, Michael, from Fannie Mae's perspective, eNote's a good thing? You a fan?
There's no bigger fan, Dan. I love eNotes, and there's lots of reasons. I'll give you a little color right now. I mean, first of all, the data quality is critical. I mean, paper notes come in and get reviewed by custodians manually. Sometimes there are data issues that where the data we get doesn't match the note. We know with eNotes that the data matches the data in the note matches the actual data we're submitted, because these are machine readable documents. We can pull the data out of the note and we can do automatic verification on them. So the next thing is we're not losing any notes. Clearly, we have them in our vault. These are transmitted vault to vault, so you're not losing notes. But I think the biggest thing is really the superior kind of delivery and experience that eNotes provide for our sellers. When they're selling loans to Fannie Mae, it's a completely digital experience. It's a push button where the note is transmitted instantly into our vault. They know that we've gotten it. The certification, as was mentioned, happens automatically. And so there's this concept of much greater control. The timeline, we're seeing the timeline between closing and funding in the secondary market can be significantly reduced as these notes are going. Sometimes in the paper world, there's multiple trips in a FedEx envelope before it actually reaches an investor or the custodian. With eNotes, this can happen instantaneously. When I talk about the kind of the efficiency in the process, it's mind-boggling. I like to tell a story about an eNote that was transmitted to us where there was an issue with the data in the note that had to get corrected. In the paper world, getting that back from a custodian, getting that resolved, getting that redelivered could take days or weeks. Within 3 hours, we had moved the note back through the warehouse bank to the lender. They were able to get a new eNote signed, reverse the registration, re-register, and transmit that back to us within 3 hours and be able to put that into the commitment. And that is just mind-boggling compared to the inefficiency in the paper process. So yeah, we love eNotes. We're really passionate about it. Fannie Mae is working with our customers and all their counterparties to make this transition.
Do you think?
Can I just back up what Michael said there? We use DocMagic for our eVault, and it has been we've had that experience a couple of times where we had the wrong address or somebody signed wrong or something with an eNote. It is brain damage in the paper world to have to find the customer, FedEx the document, put a FedEx envelope back in the package, have them find time to get all that done, right? This is literally a dream. If you ever have a problem, you can revert that and have it re-signed within minutes. It's a beautiful thing. That's a real deal. Sorry.
Michael,
Especially during the pandemic, there were a lot of customers that didn't want anyone to come to their home. So it was hard enough to close a loan, let alone to go back to them and have them re-sign documents. So that's where we saw a lot of advantage, and that's where we also saw a lot of clients get involved in e-closings and get serious about rolling out that product.
Yeah, the pandemic became a real challenge. You think about people having to come into the office and endorse notes or create these assignments and launches and so forth and ship them to custodians. We had challenges with people just being able to create those assignments in order to get those notes moved. And custodians were having challenges with staff, and it was taking a week, 2 weeks sometimes to get loans certified. And the customers that had kind of already worked on e-mortgages and eNotes in advance were at a tremendous advantage being able to deliver and get these loans certified relatively instantly. So yeah, that's a huge piece of the puzzle.
Michael, I was going to ask are you familiar with any circumstances where for any lender that you've purchased an eNote from, that it became a bad process for them, or it was poor execution, or anything that they sold it to you and then stopped selling to you because they decided to go a different direction for any reason? Have you ever been a part of anything like that?
I would say nothing that even approaches the things that happen on the paper world. We do have some minor issues with eNotes that have to get returned to get corrected. These are all been very, very easily resolvable issues. I'd say, I have seen some lenders that have started down the road with a technology partner that maybe wasn't a good fit for them. They did a few loans, they put it on the shelf, and they kind of revisited that. And we used to see a lot more of that years ago, where we had companies that were doing this start and stop. I think I'm seeing a lot less of that now. Most of the companies that are coming to us with a real firm commitment to make the change and transition. They understand it a lot better. I think Cindy made a point about reaching out to folks in the industry to help her educate her as she began to dig into this. The great news is, all these years later, there are so many more of them. I think this webinar is really representative of the eagerness of so many folks in the industry to share their learnings and help others make this transition. We see a lot of situations where folks are acting like competitors and don't want to share. That is not the case with eNotes. As I find that the lenders are very eager to share. The warehouse banks, everyone is really helping bring everyone along. And it's really very refreshing in that respect.
Very good. I have more for you later, sir. Thank you very much.
Absolutely.
All right. From an aggregator's perspective, Peter, do you like eNotes? You a fan?
Yeah, like everybody else on this call, we're huge fans. We were lucky in that we've been purchasing bulk eNotes through our bulk channel for over 10 years. And, about 4 years ago, our senior management leadership team saw, that we saw that eNotes were going to be potentially, the future of mortgage. And as a result of that, we were an early adopter, and we had folks like Canopy Mortgage who were willing to share that process with us. So, have to say though, it was a pretty slow going initially. In 2019, we actually purchased for the whole year, not 11 eNotes in our process.
I had one. I had one.
Yeah. And then in 2020, COVID started, if I recall correctly, so March, April, we actually grew to 212 eNotes, which, sounds like, well, it's not very many, but, it's still pretty solid growth. Well, really, we hit traction in 2021, and, happy to say that from 2020 to 2021, we grew to almost 4,000 notes. And year to date, we're almost at 10,000 notes through our B2B business. So, it's really gaining traction. Just to put some more numbers around it, last year, 2% of our B2B or business to business group, which includes both co-issue and correspondent, came in through eNotes. In 2022, that number is now over 10%. And through our co-issue GSE business, over 20% of our business is coming through eNotes. So, we're thrilled that the market is growing. We anticipated the market growing, and we were, glad to be early adopters. And in fact, we talk about helping others. We would love to see more aggregators. We would love to see more servicers join this market because, ultimately we think it's the future. And, the more outlets lenders have to deliver these products, I think the wider the adoption will become.
So Peter, internally, what you had to go through as an organization, okay, was it a monumental change? Was it something that you're like, I never would want to do that again? Or you describe for the folks that are aggregators, but are not in your spot with a success story like yours. Was this a monumental change for you guys?
Well, honestly, we were kind of lucky, because we had been doing eNotes via bulk for over 10 years, right? And as the largest non-bank servicer and one of the top B2B originators, we had the advantage of the fact that the manufacturing process for eNotes from the servicing standpoint had already been developed, right? So, we already had policies and procedures and processes in place for modifications, assumptions, service releases, et cetera. So, when the B2B team 4 years ago decided to engage and create a manufacturing process for co-issue and correspondent, we already had the back-end servicing in place. So really, our effort was limited to creating processes and manufacturing for the co-issue and for the correspondent, which, in itself was, still required significant effort. But, I think to your point, a servicer / originator aggregator looking to get into this market still has some work to do. But obviously we've seen the benefits, and, we're looking forward to growing as we go forward.
Have you guys experienced any fraud issues with eNotes?
No, we have not seen any fraud issues. We have not seen lost eNotes. We, corrections. I think Jeff shared a really good example of how easy it is to correct. We've got thousands of eNotes on our books, and we haven't seen fraud, and or at least I haven't seen fraud. I'd have to reach out to our servicing group to see if they've experienced any. But from our experience on the origination side, it's a relatively low risk process, and it's very secure, and it's very transparent, right? You can always tell where the eNote is, and if it's correct, and you can track it both ways, going to the GSE or back. It's a great process.
Are there any things internally that improve from an efficiency standpoint for your organization? I realize that you're not the producer of the eNote, but you're involved. So is there anything that was that created better efficiencies for your group?
I would have to say, well, there's a couple benefits, right? There's there's the tracking and reporting. The fact that this is all electronic really allows us to create transparent automated reporting that tells us exactly where the eNote is, whether it's in our eVault, whether it's at the custodian, or whether it's with the GSE. We're able to track it through our life cycle, right? And in addition to that, because everything is the push of a button, we're able to shave a couple days off the warehouse lender line. In other words, the funding line for the lender. In other words, they deliver the eNote to us. We deliver it downstream to the custodian. That takes literally seconds to push the button. That thing comes back as certified and approved, and we're able to fund the lender. So the benefit may not necessarily be ours, but it's definitely a benefit for the lender, who sees not only the streamlined delivery process from themselves to the warehouse lender, but also from us down to the custodian and subsequently the funding.
Fantastic. Thank you, Peter. Okay.
And Dan, just to quickly add on to that,
Yeah.
one of the things in the paper process when people are delivering loans to Fannie Mae is that if you're delivering through a warehouse bank, in many instances you don't really have that visibility as a lender as to whether your warehouse partner has transmitted or has sent the paper notes to the custodian. So they're waiting for certification. They don't know if it's the custodian they're waiting on or the warehouse bank they're waiting on. Whereas with eNotes, our process is set up where if you transmit us loan data and you tell us it's an eNote, if the eNote is not in our vault, if the warehouse bank has not sent that, our system automatically sends a communication to our lenders telling them that we're missing the eNote, and they know to reach out to the warehouse bank. So that really closes that loop, and that's a really kind of a nice piece of the puzzle that's been resolved.
Great, thank you. Okay, Sally, if I talk to 10 lenders in a day that are not producing eNotes, not doing e-closing, I get 2 objections or 2 concerns every single time. My title companies won't adopt it, or my investor warehouse bank won't do it. So that's obviously why we're having this panel. You're being in the title business, you're representative of the largest number of everything out there associated to title. Are you a fan of eNotes?
Yeah, we love eNotes so that we can do RON. We love RON. I mean, customers even before COVID were demanding convenience. We were seeing a request for a mobile notary coming to them go up year after year. And then because of COVID, they really started demanding a way to do it online. And so what we did to help our escrow staff is we created a national centralized RON team where our employees are the RON notary. Now we have training set up for our escrow officers. They can become RON notaries, and we've had over 100 graduates. So we do have escrow officers that are handling their own signings, doing the RONs, but most of them are being done by our national team. And we've done over 25,000 RONs. We have notaries on our team that's been with First American 20, 30 years. So they know the business and they've been in it. The survey results that we get, this is the best part. Customers love RON. Every month, month over month, we get at least 96% that give a 5-star rating. That's the highest rating. And these aren't just millennials. These are people of all ages. We've done RONs with customers in a nursing home. We've done RONs with customers in the ocean, in a submarine. We've done RONs all over the world. So, I mean, and all of them are giving a very high rating. 99% are either a 4 or 5-star, but like I said, 96% of them are giving it a 5-star rating. So above all, just giving that customer that option is a great option to have. So if lenders can start giving it, because most of the runs that we're doing, probably 90% of them are for non-lender transactions. So it's a seller or it's a cash buyer. Now we've partnered with many different lenders and we're on, I think we're getting on our 7th run system. So we are trying to be compatible, be able to operate with whatever process you have, with whatever vendor you're partnering with. We'll get our notaries trained so that we can work with you to make it happen. And then of course, with operational efficiencies, right? I mean, Ron in itself being paperless, and I heard talk about, the delivery and paying for shipments, but our employees don't even have to work in the branch. So like the people on my team who are doing runs all day, they can work remote from home. I don't have to ship them a printer or a scanner or even paper for that matter. So operational efficiency plus all the money that you can be saving from doing it the traditional way.
So Sally, back up just a second. Obviously, before we can get to Ron, you've got to have the ability to. The lender has to have an eClose platform that has the documents that can, take the title documents, take the lender documents, or at least the lender documents, have them executed electronically. Okay. And then the execution of how they're notarized can be Ron or in person, whatever. So do you think that the process of going, because you used to be, I know that you used to actually be in a world where everything was signed, those 140 pages that Jeff was talking about being signed in person. Okay, that specific process, when that jump happened and all the people you work with, is it a better process today, regardless of how it's closed, if it's electronic?
Yeah, not only is it a more efficient process, keeping those documents electronic and instead of like FedExing them or using a mobile notary and getting the documents back, not only is it more efficient, but I just lost my train of thought, but
is the process of e-closing better than the world that you were in before, regardless
Yes.
of how the e-notarization is done?
Thank you, Dan. I was getting ready to go to the fraud part of it. So when I was like, I knew I had something good I wanted to share with you guys. So it reduces fraud because when you're doing a RON transaction, you're putting the customer through KBA. So you have knowledge-based authentication questions, but you're also putting them through the ID scan. So not only is the front of the ID having the OCR read, but the back of the ID is having the barcode scan. So you're verifying the customer, not only having them on camera with your notary and that video being stored, but you're verifying them with KBA and ID. So it's just a more secure process as well to help prevent fraud.
Okay. All right. Okay. So let me pause there and ask the entire group a question. Is there anything else that anybody would like to say that they may have left out about why you love eNotes, why they're a good thing? I'm going to switch gears a little bit, but is there any other comments that anyone wants to make that they wanted to say earlier?
I just want to validate what Sally said about the consumer experience at the end. I tell my salespeople, like, if we do have a perfect loan process and we botch the closing, it's all for naught, right? And so if we can have our last interaction with our borrower be something that they thought was helpful, they love, they're going to remember that. And like, we're in the business of try to get their business again. I want to have that same customer back because it costs me less, right? So if I can provide a better experience at closing, they're going to remember me more. And so it's going to cost me less money to get them back in the future. So you made a really, really valid point there about, leave them with a smile on their face.
Very good. I'm just going to, really quickly, does anybody have any comments to make about why producing eNotes has any concerns about compliance? Does anybody, because there's people on this, I promise you, watching, and they're sitting there trying to figure out where the hole is. And all of the folks that are supportive of this, okay, you have to deal with this. Is there anybody that can attest to got a compliance problem? That's a reason not to go forward with eNotes. Anybody?
No.
I would say quite the opposite, to be honest with you. I think from the compliance people should be thrilled about this, in that everything is really well documented and tracked electronically. And then particularly with the note, once it's signed, the fingerprint or the hash of that note is then locked down. It's registered with MERS. So anybody else that gets a copy of that document a day later, a month later, 10 years later, is able to verify the authenticity of it back to closing. And so I think from a compliance perspective, there's a lot to like here, particularly as you compare it to paper.
Good. Anybody else? Okay.
No, I agree completely. Compliance, operational risk, all those departments reviewed our policies and procedures before we ever rolled this out and had absolutely no concerns, which I can't say about any other process or policy that, you know, they really dig deep to try to find the issues, try to break the process so that we can make sure we have a way to fix it. And there were no concerns.
Okay. All right, very good. All right. Thank you. Okay. Let me ask this question. From each of your perspectives, okay. Obviously, you know, I don't know that there's a number out there that says X. I know we know how to track eNotes and we know what that is through the numbers with MERS. But I don't know of the number that says, you know, 80% of the market is not e-closing eNotes or not e-closing or eNotes, or it's 90%. We just, you know, speculate a little bit based on what we hear in numbers. But it's obviously a fact that the lion's share of the market is not experiencing the benefits that each of you are in your respective category. What do you think the reason is that, from your perspective, the reason that adoption has not kicked off any sooner, quicker, more than what it has? So I'll go back to you, Jeff, and say your peers that are lenders, what do you think the issue for them has been on why they haven't adopted this at this point?
At this point, it's just all fear of change and fear of the unknown. There were good excuses, you know, prior to the pandemic in terms of lack of liquidity, lack of warehouse commitment, like those don't exist anymore. And so at this point, it's people afraid of change. And I would say, you know, right now, probably being sort of muddled in the whole hunker down mentality. You know, it's a tough market. And I mean, really, they should be now thinking of ways to save money, right? And it's clear that we can save money with eNotes. And so really, they should be thinking about this now. But I just see this mentality of, it's just too hard. I don't want to try. And ultimately, it starts with the executive management team. If you want it, it can happen. And it's not that hard.
Very good. Thank you. All right. I'd like Cindy, you take a whack at that, please. Same question.
Well, I agree completely because I haven't had anyone throw out the excuses that I used to hear pre-pandemic. And so it is just it's a big change. Once you're involved in making those changes though, and realize what great partners are out there to help you with it, there's really no reason to move forward. And Jeff made an excellent point about decreasing expenses right now. A lot of companies are going through layoffs, and the fact is during the pandemic in 2021 especially, my volume increased because all of my customers' volume increased, almost tripled. And I had no additional staff. Everybody was hiring, so it was hard to hire the right people. Plus, I had most of my team working from home. The only ones that had to go to the office are the ones that deal with paper. And so even now, somebody, instead of calling in sick and not working, I get one of my shippers will say, hey, I need to work from home today. I'll handle all the eNotes. And I say, well, I'll find something else for you to do because that's going to take you about 30 minutes. So it's nice to know that they're not chained to their desks because all they can handle is paper. So we do have the opportunity to do more work with fewer people. And, you know, I thank God I eventually was able to hire some more people, but I didn't, we were just as productive, if not more productive, working from home and handling things electronically. Adding customers that do eNotes was just one of several initiatives to increase automation and improve efficiency internally. But it's the one that I appreciate having implemented the most, because we are just ready for anybody who reaches out and says, hey, do you guys do eNotes? And once the implementation is over, all of the testing and getting all the documentation with your investors and GSEs, everybody has gotten better at what they do and more efficient. And I mean, I know when we first talked to you, Dan, about switching our eVault provider to DocMagic, you guys had a waiting list. This was in early 2020, I believe, a waiting list already that you had about 200, I believe, were in line to talk about eNotes and e-closings and getting their eVault set up. And you did that very, very quickly. So I can't think of an excuse. And if I hear anybody come up with one, I'll let you know what it is. But I think it's just a matter of change.
Okay, thank you.
And you bite the bullet.
Michael, your thoughts about lack of adoption or why it's not moving at, breakneck speed?
It truly isn't something I give a lot of thought to, and I've been working on for a long time. If you talk to people, there's a lengthy list of reasons people would give you in terms of obstacles to adoption. Some of them are real, some are perceived. I think that the biggest thing over the years has been building that ecosystem. And although we talked about all the warehouse banks, all the parties that are on board, as I look at some of the customers that we're onboarding right now, and I look at all the customers that they sell to, beyond other than the GSEs, I often find that only about half of their investors, or even sometimes less, are really actively buying eNotes. So it may be that they've approved by Fannie to sell us eNotes, but they may be operating in a pilot or really just a kind of a controlled rollout with a couple customers trying to understand this. And so really we need to move the investors, both on the servicing side and the whole loan side, to where everybody's doors are wide open. And that's going to be a focus of ours going into the year. I was glad to hear Peter make a similar comment in terms of his interest in seeing more aggregators move into the space, because I think that's really important. But another thing I want to point out is a lot of our customers have the eNote and the conversion to eNotes tied up in this whole conversation around e-closing and the settlement process. And what I'm thrilled that we're starting to see is that because the eNote doesn't need to be witnessed, it doesn't have to be signed necessarily in front of the settlement agent, is some of our lenders are actually taking ownership over the execution of the note. They have the ability through their own platforms that they're using to get certain documents signed pre-closing through a hybrid or kind of a bifurcated process, having that note signed before the settlement actually occurs, either that day or in some cases prior days. Most lenders are doing it the same day. But that being said, taking kind of the ownership over the execution of the note away from the settlement actually makes it easier to scale eNotes, particularly as we're moving into more of a purchase market. We're seeing fewer refis, where most of the eNotes had traditionally been over the years on the purchase side, because the settlement world is so fragmented. There's so many different providers out there. It becomes more difficult to, as you're working with lots of providers, to be able to get them all to do e-closings. There are different kind of points of their readiness. And so the ability to take the note out of that process and have that note signed outside of closing is really what's driving a lot of the volume we're starting to see from lenders that are scaling.
Well, let me do this real quick because I think this is a spot on topic. The question is, aren't eNotes more expensive than traditional eNotes since you have to register them with MERS? We didn't talk about this, but I think that, every lender that I've ever spoke to that has any history whatsoever, they're going to tell you that they do put money to the bottom line in a positive way. Jeff, Mike, would y'all speak to that real quick? Jeff, you first.
Yeah, sure. You do have, different expenses with an eNote. I think with DocMagic, it's one of the best priced in the market. So good for you guys. But when you just count the cost and efficiency in the human capital, the human time of shuffling paper from title company to lender to warehouse bank to, and the margin of that is wages that you're not paying. In markets where you have a negative interest arbitrage with warehouse, it's especially valuable to us. Doesn't help Cindy in that case, but helps us. And so it's clear that it is that it's saving us money. And like I keep harping on, it gives the consumer what they want. In the end, when you do that, you win.
Very good. Okay.
Yeah, and that's the most important piece. But I would say is that, as if you look at there are certainly cost savings associated with eNotes, and there's additional costs associated with the platforms and some of the components. If you're operating in two different modes, part paper and a small portion then it's not going to be a cost savings to you. But once you can actually begin to build scale and then revisit your operations, we've seen lenders that have done significant kind of re-engineering of what happens post-closing. To now they're not having to review all these documents. They know that they're signed. The platform ensures that. There are jobs, there are people that are being kind of repositioned into other roles because they're freeing up resources. And I think it's the lenders that have created that scale and can take a step back and really kind of do some re-engineering around the process where you start to really see some cost savings.
Fantastic. Thank you. Let me go to you, Sally, real quick, because I want to get your perspective on what do you think the reason is from a title perspective, settlement agent perspective, that adoption has been an issue. What's your opinion?
I almost feel like a broken record because everyone has said the same thing. It's like change is hard. And there's a lot to learn when you're going into Ron or, learning these systems. And even from an escrow point of view, if you don't have a centralized team that you can just kick it over to and have them do it, then you have to learn these different systems. But from like a lender adoption, I feel like it's starting to pick up, especially this year. I've been reached out from so many different lenders this year, ready to pilot, ready to get this going. So I feel like it's picking up, which is a great thing. But I would definitely say it's change and learning the new way to do things. It takes time and change is hard.
Okay. Peter, do you have any thoughts on adoption?
Yeah, I mean, everybody's brought great points to the table on that. It's fear of change, and it's the fact that processes have to be updated and or re-engineered. And from an aggregator perspective, not only would your origination process need to be updated to reflect the eNote process and ingestion, but also if you're servicing these notes, you need to update your servicing processes. So it takes effort, but given our experience, we think that the effort is well worth it. And also, since we've been in this space for the last 4 years, we've actually seen significant adoption. 3 out of the top 4 correspondent investors, 8 of the top 25 servicers are now buying eNotes per MERS registry guidance. So again, it takes some work, but it's definitely worth it. And we believe that the industry is going in that direction.
Very good. Okay, Jeff, I want to finish with you a question. As the lender, okay, when you look at what you want to try to, is there a next step in this journey? Is there a next step in this process that you feel like, okay, when I finally get to this place, I will have accomplished everything that I need to do? Or because a lot of times what I run into, and I'm sure some of you do too, in having this conversation, is that people will say, okay, well, I need to do this. I need to get an eClose platform, and I've got to get an eVault, and my warehouse, my title, my aggregators, whoever. Okay, that's why we're here today. But then they'll say, but then I need to get to this next step or to this next level. Do you feel like that today, as a lender producing eNotes, that if you could get to the place where it wasn't just 40%, but it was the lion's share of what you did, do you feel like that you would have your operations as efficient as you could make them in the electronic space of eNotes? Or do you feel like that this is an ever-ending journey that you'll never get there?
Look, I don't think we're ever going to eliminate all paper. So we're still going to have processes to handle that. But we want to get very close to 100% in the coming years. And so there's no question that you simply need less people in post-closing if the vast majority of what you do is eNote. For us, the next frontier is to have more RON adoption. One of our challenges, most of what we do is an eNote and a paper notary. So everything but the notary docs are signed electronically. And that, in one sense, can pose a challenge in that you're closing in two mediums, right? So you're having the borrower sign before closing, which everyone loves. And you show up a title and you sign, 4 docs. That's great. But sometimes when you're closing in two mediums, you have the challenge of making sure that both mediums actually happen and in the right order. And so for us, Nirvana is RON. One of the challenges with RON though is that often on a purchase, we don't control title. And so now we're dealing with a title company that isn't versed in the process or isn't able to do an eNotary. And so now we're having to get an eNotary from some other company. And that's logistically a problem and extra cost, right? And so I want to be an evangelist for this because when the tide rises, all boats rise. And so if we can get more of the industry on this bandwagon to where I can close a RON with anybody without any headache, it's only going to help us.
Okay. All right. And then this is my last question. And if we have any, I think I have one question, but do you think that it matters? Anyone can take a whack at this answer. Do you think it matters if you're a small or medium-sized lender to a very large lender as to whether or not this is a good thing for you? I'll start with you, Jeff. Jeff, do you think that it matters based on what size you are as a lender, whether you should do this or not?
No, irrelevant.
Irrelevant. Anyone else have an opinion on that?
I would say the companies that I've worked with, the smaller ones versus the large ones, are equally thrilled when they start delivering eNotes and the light bulb comes on in terms of the implications. No, I don't think it matters at all.
Okay. All right.
Right,
Okay.
the smaller ones, in some strange ways, they can't scale the same way, but it could allow them to grow faster than they were with these efficiencies in place.
Okay. Very good. Does anybody have any other thoughts that they want to pass along to our audience? Okay. Allison?
Thanks, Dan. So we're almost at the top of the hour. So I think we only really have time to do one question as part of the Q&A. So to the audience, if there's a question that we don't get to during the webinar today, we will be passing all of these questions over to DocMagic and they will be able to reach out to you afterwards and answer all of your questions. So the first question that I have is, and I think this might have been touched on, but can we talk a little bit more about the ROI of eNotes versus paper?
Yeah, I'll speak to that again. It's a few things. When I have a package signed electronically, it is in my e-folder, in my LOS, literally within seconds. And I don't have to have a person looking at every document to see if it's signed right, because it's been signed correctly. It's electronic. I don't have to worry about something being missed. I'm not thumbing through all those papers. And so we could post-close, 50% reduction at least in the staff it takes us to review packages and get them on to the next stage in the process. That's just one thing. And again, in markets like 2020, where there was some negative interest arbitrage, where rates were so low on the note that they actually were lower than our cost of funds, it was a real value to be able to liquidate that within 24 hours. I funded on Monday, I committed on Tuesday, I get my money on Wednesday from Fannie or my aggregator. That's amazing.
I can
We
add
have
too.
some companies that are taking out like 3 or 4 day commitments when delivering a paper note that's already in-house. And with an eNote, they're taking out a 1 day commitment because they know it's going to get certified when they push that button. And I mean, that's instant savings right there. And that's just one small piece of the puzzle.
I can speak to a couple of the peers that did comment on this. Beth Eller from Truliant Federal Credit Union on a recent webinar said that they've tracked this, and it's a fact that, you know, while you can't put sometimes hard dollars on it, the range would be from around $400 to $600 that they can save through efficiencies. Jeff Bodie, who's one of the pioneers in this industry, I love listening to Jeff talk. I met him in 14. He made the statement that in 2017, he was originating about 750 loans a month. They acquired a company that was producing half of that. The company they were acquiring had 27 people in operations, closing, funding, post-closing. He had 3. He acquired the 350 units that in addition, and today that group is managed by 3. So he doubled, you know, he not doubled, but he went from 700 something to over 300 something. So it's not, the idea is not that it's you can let everybody go, but you can do more because it is more of an efficient process. So those are from your peers.
Great. And unfortunately, we are at the top of the hour. So I do want to say thank you to all of you and to our panel for joining us. There are a bunch of questions that we'll be answering afterwards. And thank you to our audience for listening to today's webinar. HousingWire, again, did record this webinar, and it will be available to watch on demand on the website, housingwire.com. Thank you for joining us. Hopefully we'll see you all again soon.